A local consumer group is blaming oil refineries for last month's huge spike in gas prices. The president of Consumer Watchdog testified today at a state Senate hearing. Here's CBS 2 political reporter Dave Bryant.
They went up $1 in February when their refineries went offline.
Consumer Watchdog President Jamie Court told a state Senate hearing in Sacramento California's refineries are effectively running up prices by keeping small reserves of only about a week's supply of gas on hand. Case in point, he testified, the way gas prices skyrocketed in February. On the first of the month, the average gas price in the L.A. area was $2.45 a gallon. But by March 1st, just 1 month later, the price had shot up more than $1 a gallon to $3.48. That's a 42% price hike in a month.
Refiners are rigging the market, and they are keeping it on less inventories than is the national average. That seems to have a huge impact when these refineries break, and it is unmistakable. People who've watched this for 10 years. One refinery goes down, prices go up a little. Two refineries go down, prices go through the roof. Is that an accident? My guess is it's not.
Oil industry representatives testified the real reasons for the increased prices were supply shortages after the February explosion at the ExxonMobil refinery in Torrance, a nationwide labor strike at Tesoro refineries, and the requirement that California refineries make the shift to begin producing the cleaner summer blend of gas by April 1st. Court says the state should require the refineries to keep a larger reserve on 2 weeks instead of 1 to reduce the price vulnerability after every refinery accident or labor dispute.
Bulk storage basically has gone away.
Two other witnesses with connections to the oil industry testify there are serious problems with the state ordering companies to keep gasoline stocks on hold in California.
The risk of holding that material and not making money on it has increased. And secondly, the cost of the storage is significant.
Asking companies to hold stocks doesn't necessarily do anything when prices go up because you say, please sell. And I think the other question I have, mandating that a refiner in Los Angeles hold stocks may run into a constitutional issue.
A constitutional issue as in restraint of trade from state to state. Nonetheless, some committee members questioned why all the oil companies raised their gas prices when only 1 or 2 of them were short-supplied because of accidents.
That's what the perception is. Why is everyone raising their prices when 2 had problems?
When you have 7 refiners with 11 refineries and you have 2 that produce over 50% go down, this is a major problem for California and our economy and people's livelihoods. How do we fix this?
According to one study that was just released, if you took the average price of gas in California during February and the average price of gas in the rest of the country during that month, Californians paid about $500 million more for their gas. So the search for answers continues at the state capitol. In Torrance, Dave Bryant, CBS 2 News.
It's hard to believe it's been a quarter century since Julia Roberts and Richard Gere fell in love on the big screen in Pretty Woman.